Hey there, everyone. Welcome back to the channel. Today, we're peeling back the layers on one of the biggest real estate stories in recent history. That's right, we're talking about the Florida real estate bubble. But this isn't just a leak or a little dip in prices. This is a catastrophic collapse that's shaking the Sunshine State to its core. Stick around because in this video, we're going to break down the data, dive into the top 12 Florida markets in crisis, and uncover how this is reshaping the entire state's housing market. And here's the kicker. It's not just about real estate. It's about insurance costs, climate risk, and a demographic shift that's creating the perfect storm. Segment 1. Setting the stage for collapse. Let's start with the big picture. In the last 18 months, Florida's property insurance rates have skyrocketed by a jaw-dropping 238%. Yes, you heard that right. Over 15 major insurance carriers have pulled out of the state since 2022, leaving homeowners in the lurch. Foreign investors, once a critical pillar of Florida's real estate market, have disappeared, with investment down 60% year over year, and new mortgage applications down 43%. These numbers aren't just scary, they're game-changing for Florida's economy. Cut to visuals, heat maps showing declining property values across Florida. But wait, there's more. It's not just about rising costs. We're also seeing climate risks and population shifts fundamentally reshaping Florida's real estate landscape. Flood zones have expanded, infrastructure costs are soaring, and long-time homeowners are being forced to sell. It's a perfect storm unlike anything we've seen before. Segment 2. Jacksonville's tech collapse. Market #12. Let's kick things off in Jacksonville's South Side, once heralded as Florida's tech hub and a hotspot for young professionals. Today, it's telling a different story. Home prices here have dropped 12% since January, and properties are sitting on the market for an average of 89 days. Compare that to just 22 days during the market peak. But it gets worse. Inventory levels have surged by 178% year over year, creating an oversupply that's crushing prices. Developers, who were once building homes at a frantic pace, have halted projects mid-construction, with 63% completion rates. That's right, entire neighborhoods are now ghost towns. Adding fuel to the fire, layoffs in the tech sector have hit Jacksonville hard. Major employers have reduced their workforce by 34%, leading to an exodus of young professionals. Rental vacancy rates have jumped from 4% to 17% in just 6 months. And here's the kicker: insurance rates in Jacksonville's coastal zones have spiked by 44%. It's a grim picture. Segment 3. Daytona Beach's tourism troubles. Market #11. Now let's head south to Daytona Beach. This one-time vacation hotspot is experiencing a dramatic downturn. Property values here have dropped 15%, and the vacation rental market has been hit especially hard. Occupancy rates are down 32%, turning what were once lucrative investments into cash flow nightmares. Insurance premiums in Daytona Beach have skyrocketed, jumping from $2,800 to $5,900 annually in just 8 months. Flood zones are seeing even steeper increases, with some properties facing annual costs upwards of $12,200. These rising costs have led to an 89% increase in foreclosures just in the last quarter. Segment 4. Naples and the luxury exodus. Market #10. Let's talk about Naples. Known for its luxury real estate, Naples is now experiencing what many are calling the Great Luxury Exodus. Properties in the $1 million plus range have seen values drop by 28%, with some ultra-luxury homes taking hits as steep as 40%. What's driving this? Well, foreign investment, which once made up 35% of sales, is down to just 12%. Vacancies in luxury properties have surged by 47%, and rental rates in high-end condos have dropped by 23%. When you factor in skyrocketing insurance costs, it's clear why sellers are panicking. Segment 5. Orlando's tourism dependency. Market #9. Even Orlando, with its world-famous theme parks, isn't immune. Property values in Orlando's tourism corridor have dropped 19%. But the real story is the commercial sector. Vacancy rates in commercial properties have skyrocketed to 24%, up from just 7% 18 months ago. Vacation rentals are struggling too. Average daily rates have fallen from $289 to $179, barely covering operational costs. Foreclosure rates in the area have surged 112%, and developers are pulling out. In fact, Over $2.8 billion worth of planned projects have been canceled or postponed. Segment 6. Miami and West Palm Beach markets in crisis. Moving to Miami's Brickell area, the condo market is facing a serious oversupply issue. Inventory has ballooned to 42 months of supply, up from just 8 months last year. Prices are down 20%, and luxury towers are seeing declines of up to 35%. West Palm Beach tells a similar story. The luxury market here has crashed by 28%, with some properties losing nearly half their value. Infrastructure concerns and rising insurance costs are freezing sales. Foreign buyers, almost non-existent. Segment 7. The big picture and investor insights. So what does all this mean for you? First, it's clear that Florida's real estate market is undergoing a fundamental transformation. Rising insurance costs, climate risks, and shifting population dynamics are reshaping how we value properties. But it's not all bad news. For savvy investors, this could present some unique opportunities. Timing is everything. Experts predict the market may bottom out around Q3 of 2025, with some stabilization expected by 2026. So, if you're looking to buy, keep an eye on inland markets and areas with completed infrastructure upgrades. Thank you for sticking with me through this deep dive into Florida's real estate market. If you found this video insightful, do me a favor, hit that like button, subscribe to the channel, and share this video with someone who needs to hear this. Remember, every crisis brings opportunities for those who are informed and prepared. Stay analytical, stay ahead of the curve, and I'll see you in the next video.